Hi everybody. As always, make sure to subscribe to our YouTube channel, and you can follow me on Facebook and on Twitter. The username is @JeffYastine. Well, as investors, we have a choice. Depending on your viewpoint, you might even call it a dilemma. Do you want to be right, or do you want to make money? In other words, is your opinion more important, or is the market's opinion of your opinion the better, meaning more profitable measuring stick? Your answer will in many ways influence whether you make money consistently in the stock market or not. Since it's election day, here's an example. Being right means believing that the stock market must go up or down in a big way for weeks or months at a time because one party wins or loses the White House, control of Congress, or both. As CNBC noted recently, it depends. Since World War II, when a Democrat was in the White House, the stock market is up with an annual average gain of around 11% compared to 7% with a Republican president. But when Republicans hold the House of Representatives, which is where the nation sets its spending priorities, those figures are almost exactly reversed, and Republicans come out on top. That's why when people ask me which candidate or which party is better for the market, I may have my own personal opinions, as we all should, but as an investor, I say it doesn't matter. The stock market is made up of hundreds of stocks, thousands of stocks. Each scenario has its own risks and its own rewards, and I'd rather keep my focus on looking for the rewards, looking for opportunities rather than care about being right. I want to make money. And here's another example. Being right means believing that the stock market must go down or accelerate higher because of recent economic data or what we observe happening in our communities, our states, our regions, and the national economic picture. Now, I don't know how many times in my investing and speculating career that people have told me, well, the stock market's a goner. A bear market is right around the corner. I know there's a bubble and it's going to pop in the next 24 hours, the next week, the next month, the next quarter. At some point, people will be right about that. And I don't know how many times I've thought that and been proven wrong at least as many times as I've been proven right, and likely far more if I was really counting. Now, I can't help but have a position about the market, bullish or bearish. And when I see clues one way or the other, I feel compelled to mention them to my subscribers. But ultimately, I want to keep an open mind about these sorts of things. I know that there's always a big bear market lying in wait, and it's always when we least expect. Bull markets unveil themselves in the same way. And like most people, I probably wasted more time and squandered dozens of profit opportunities fretting about those sorts of things one way or the other. Now let's flip that notion around with a third example. Being right means believing that the vast majority of tech stocks must continue to inevitably and consistently go up because we are in this exciting new era of innovation. Now, tech stocks have inevitably and consistently gone up in a very powerful way the last few years. I've made lots of money myself, and my subscribers have as well. And we are in an exciting era of innovation. But I can tell you just from experience that stock market leadership has a way of shifting and doing it in a way that you barely notice except when you look in the rearview mirror many weeks or months later. Now, we may be in one of those periods right now. And like all times, we don't know until we look at it in the rearview mirror. Since early September, most of the major tech stocks hit their all-time highs and have faded somewhat. As a result, the NASDAQ 100 is down about 11%. Meanwhile, I see some surprising changes. For instance, bank stocks are up 1% in that period of time. Travel stocks, as represented by an index like the JETS ETF, are down only half of what the NASDAQ is. Meanwhile, energy stocks, as represented by the XLE ETF, have lagged everything else. They're down nearly 16% in that time frame. But if we look at those same ETFs from mid-October, meaning the last couple of weeks, when the NASDAQ 100 hit its secondary highs, that index is down about 9%. Meanwhile, banks, energy, and travel have all performed significantly better. Now, I do not know if that will continue to be the case or not. I don't have a crystal ball on these things, but I like the direction of them. And I think there is tremendous value in those sectors, and that value is now starting to get recognized by others. And those stocks are starting to get new sets of buyers who see the same things I do. They like the risk and reward. And if I'm right, we'll see continued gains and be well rewarded for it in coming months and years. And if I'm wrong, well, you know what? It'll be pretty obvious. And that's okay. We'll shift gears and we'll get in line with the market trend and we'll look for more opportunities elsewhere. And like I said, that's the question we all face. Do you want to be right or do you want to make money? I think you know where I stand. Again, remember to subscribe to our YouTube channel, follow me on Facebook and on Twitter. I'm Jeff Yastine.